Hey guys, sorry about that. I got kind of short on time. I've got like a 15-minute window that I have to keep these videos into just for upload and size purposes. Anyway, we left off on advantages of a corporation. I briefly mentioned this limited liability, ease of transferring ownership, unlimited life, and the ability to attract financing. The disadvantages are the double taxation of profits, meaning that the corporation is going to be taxed at one rate the first time, the time that revenue comes in, is going to be taxed. And then when it's paid out to owners or to employees, that is going to get another taxation, which is basically the income tax that's going to hit. So corporations must pay federal and state income tax on their profit. In addition, any profits or dividends paid to stockholders are taxed as personal income, although at somewhat reduced rate. And so that is a disadvantage. Cost and complexity of formation, as outlined earlier, forming a corporation involves several steps and costs can run into thousands of dollars, including state filing, registration, and license fees, as well as the cost of attorneys and accountants. So it can be very costly, but it can also not be very costly. And I just wanted to share that with you. So in case you ever thought, maybe I want to open a business, but I don't want to mess up my own tax situation, which these things do happen. I mean, people think, if I open up a business and all the income that flows to this business is going to flow to me as an individual, it is going to shift your tax metrics. And I know it's really geeky and to think about this stuff right now, but later in life, you want to try to advantage yourself in a way that you pay minimum taxes, the minimum legally required taxes, while you're maximizing your profit. There is, like I said before, this difference between tax avoidance and tax evasion. Tax avoidance, legal. Tax evasion, illegal. So you want to pay attention to that nuance and rely on licensed individuals to help you through that, accountants, lawyers, things like that. So more government restrictions. Unlike sole proprietorships and partnerships, corporations are subject to many regulations and reporting requirements. For example, corporations must register in each state where they do business and must also register with the SEC, Securities and Exchange Commission, before selling stock to the public. Unless it's closely held, owned by a small group of stockholders, a firm must publish financial reports on a regular basis and file other special reports with the SEC and state and federal agencies. These reporting requirements can impose substantial costs, and published information on corporate operations may also give competitors an advantage by them being able to access these public records. But for small corporations, not as much requirements on the type of information that you have to put forth. There are filings you have to do, but it's much scaled down on a smaller corporation. So let's talk about different types of corporations. Three types of corporate business organizations provide limited liability. The C Corp is the conventional or basic form of corporate organization. Small businesses may achieve liability protection through S corporations or limited liability companies, LLC. You've heard me mention that LLC term before. An S Corp is a hybrid entity, allowing smaller corporations to avoid double taxation of corporate profits as long as they meet certain size and ownership requirements. Organized like a corporation with stockholders, directors, and officers, an S Corp is taxed like a partnership. Income and losses flow through to the stockholders and are taxed as personal income. An S corporation are allowed a maximum of 100 qualifying shareholders and one class of stock. The owners of an S corp are not personally liable for the debt of the corporation. And then lastly, the newer type of business entity, the LLC, limited liability company, is also a hybrid organization. Like S corporations, they appeal to small businesses because they are easy to set up and not subject to many restrictions. LLCs offer the same liability. I'm skipping a line. Protection as corporations, as well as the option of being taxed as a partnership or a corporation. First authorized in Wyoming in 1977, LLCs became popular after 1988 tax ruling that treats them like partnerships for tax purposes. Today, all states allow the formation of LLCs. And from personal experience, places I've worked, businesses that I've seen, if you're going to do any type of business with the public, it's a really good idea to have some type of business entity that will give you some type of liability protection. So let's say that you decide I'm going to open up this type of retail shop. You put in $50,000. That is your exposure. Well, if you didn't form some type of business entity, your exposure does not end at that 50,000. Meaning that if things go wrong, if it goes bankrupt, let's say like over 5, 10 years, the company now has $200,000 worth of debt, and it goes belly up, bankrupt, ceases operation. Yeah, guess what? Who the lenders are going to come after? They're going to come after you personally because you didn't have a business structure, a business entity that provided limited liability. And so, if the company had assets, like let's say that the corporation owns the property in which it exists, it owns the building, what would happen in those situations? The lenders who have extended credit to the company, they would go after those assets and they would seize or put a lien on them. So when they're sold, there might be some asset recovery there, but there would be limited exposure to the owner or shareholders of the companies because of this business entity. So it is very much in your interest to at least seek out some basic form of business identity, whether it be a LLC or a corporation, in order to limit your liability. Once again, I will keep harping on it. Taxes, liability, exit strategy. These are things that a lot of people don't think about until it's too late. And then it's like, oh my God, why didn't I think about this sooner? Why didn't I prepare for taxes? Why didn't I think about the potential of what could go wrong in liabilities? How could I be exposed legally myself to this? And so, yeah, it can become a real nightmare and a burden. And having a corporate or company structure will give you some protection against these types of things. Once again, not a permission slip to do illicit or illegal, unethical things, but in the event that you're doing a legitimate business and everything's on the up and up, but still bad things happen, you would have some degree of protection there. Always, once again, a good idea to consult with professionals in the realm of tax preparation, planning, and in some cases, the use of a lawyer to give you some advice on this stuff. So I'm not going to go over spend a lot of time on this, the advantages and disadvantages of major types of business organization. This chart is in the book, and I've already hit on a lot of these high points. And so for time purposes, I'm just not going to go over all the details, but I do encourage you to go to the book and check out this chart. It's a extensive chart. It's got a lot of good data on it. I do want to get to talking about specialized forms of business. A co-op or cooperative is a legal entity with several corporate features such as limited liability and unlimited lifespan, an elected board of directors and an administrative staff. Member owners pay annual fees to the cooperative and share in the profits, which are distributed to members in proportion to their contribution. Because they do not retain any profits, cooperatives are not subject to taxes. So I've seen some examples of this where, like, some artisans say, oh, we all are good at artisan type things, so let's open up a restaurant / bakery / microbrewery, and everybody contributes X amount of dollars into this cooperative, and we all run it together, and we create and sell our products, and whatever profits that we make will flow through to the owners of this cooperative. It's a kind of a non-traditional business form. Not to say that it's not growing in popularity. You're seeing more and more of these types of things pop up where people say, I can't do this by myself, but if I had 3, 5, 10 other people that could come together and help me form this thing, and we all contribute to it, like one person coming up with $50,000, pretty difficult. 10 people coming up with $5,000 each, doable, right? You could even have a cooperative where it's like you decide that you want to rent out a space and you all come together, put in 50 grand as an example, and you divide it into 10 separate businesses, and it becomes like a flea market cooperative type thing where it's all artisan type work or sales driven products and services. I don't know, just throwing out ideas of what it could be. I've seen one, like I said, that was kind of like a restaurant / microbrewery / bakery, and they all worked in together and made decisions together on how it was going to work. Yeah, it's just another type of business model. There are two types of cooperatives. Buyer cooperative combine members' purchasing power. Pooling buying power and buying in volume increases purchasing power and efficiency, results in lower prices. Once again, with this artisan thing, Imagine that you have a group of people that are all hobbyists, and they all are pottery people. They all say, we all like to make pottery, and some of them are better than others. They all say, well, in this pottery class that we've all been going to for years and doing it as a hobbyist, we think consumers would really like this. So why don't the best 4, 5, 6 of us get together and put some money together and go in to set up our own shop and buy in bulk the materials we need to produce this stuff, and then start selling it. And that would be an example of what a cooperative could be. At the end of the year, members get a share of the profits based on how much they bought. Obtaining discounts to lower costs gives the corner Ace Hardware store a chance to survive against retailing giants such as Home Depot, Inc., and Lowe's. Seller cooperatives are popular in agriculture, wherein individual producers join to compete more effectively with larger producers. Member dues support market development, national advertising, and other business activities. In addition to Sunkist and Land O'Lakes, other familiar cooperatives are Calavo, which is avocados, Ocean Spray, cranberries and juices, and Blue Diamond, nuts. CHS Inc., the largest cooperative in the United States, sells energy, supply, food change. There must be a typo there. Energy, supply, food, and grain. I don't know what the supply is. There's got to be a typo there. Anyway, they sell a number of diverse products. And lastly, a joint venture. 2 or more companies form an alliance to pursue a specific project, usually for a specified time period. There are many reasons for a joint venture. The project may be too large for one company to handle on its own, and joint ventures will also afford companies access to new markets, products, or technology. I mentioned this last week in class. If we have one company in a different country, we both could be in similar product types, and I say, well, why don't we join forces and open up a new corporation or new company somewhere else, combining our strengths. This allows for the joint strength of both companies to step in order to help both of them grow. So joint ventures are very much a good way to do that. All right, franchising is another way. We talked about this briefly last week, so I'm not going to really dive deep into it. But in brief, a franchisor, somebody that owns a franchise, will sell the rights to a individual or group business owner in order for them to franchise that business. It's basically a business in a box. You pay me a franchise agreement, and I in turn will supply you with marketing, logo, business image, identity, products and services. You have to pay for the products and services, but I will cut you into my network and allow you to open up more quickly, efficiently. And basically, when you buy a franchise, you're buying a proven system of business. I had a friend that bought a Firehouse Subs franchise, something like $450,000 it took to get this thing going, but he was able to look at Firehouse Sub restaurants in different markets and get an idea of how much sales were going to be in the first 6 months to a year, how much they were going to be at the 2-year mark, 3-year mark, and understand how the revenue should work for his store. And so buying a franchise is a good business model. That's why there's so many of them everywhere. But there are advantages and disadvantages, just like in every choice. The advantage, you get to buy into a proven system of business. The disadvantage is that you have to kind of do what they say. Otherwise, they can cancel your franchise agreement and take your franchise away from them. If you don't operate the way in which they want you to operate, yeah, you can have a separation and they'll cancel your franchise agreement. So when you sign up for a franchise, you're getting married to this company and saying, I'm willing to do the things you want me to do. And if you don't meet those standards, they can and will take away your franchise from you. There is a franchise agreement in place for this purpose. Some of the top franchises: 7-Eleven, McDonald's, Dunkin' Donuts, UPS Store, Jimmy John's, which I'm not a big fan of. Sorry, Jimmy, just not very good, especially compared to Firehouse. Dairy Queen, Ace Hardware, Wingstop, Sports Clips, Remax. All these are examples of franchises. This is also a metric from the book, and you can see how much it costs to get one going. Pretty big range in prices there. I would tend towards the upper end of this. And then lastly, some advantages and disadvantages. And what I'm actually going to do for time purposes, we're going to go over this in our next class meeting. I'm going to take a time out here. I appreciate your time and attention. One last round of applause for Ms. Hinkle for helping us out. And I'll see you guys Thursday. You have a great day. Talk to you soon.